And we see this very clearly that they are very in favor and very bullish on the future with the statement that actually Brett Garlinghouse was publicly saying that he thinks there will be new all-time highs for this year. And retailers, we are like down in this really bad sentiment and we are scared and fearful, but I don't think we should.
Take the opportunity. Right now we have the opportunity to have regulation and set it in stone. This is like a live usage of it because anybody can hold XRP. Anyone can use XRP. It has no jurisdiction. And in this setting, it's so obvious why XRP is so powerful. In the world basically of permissioned domains, indexes, and jurisdictions, the asset without a jurisdiction is king.
Hey and welcome to Krippenreiter TV, our weekly series on Monday, hosted by me, Krippenreiter, and my regular co-host Vet. This week was packed with news and new partnerships, but one topic was especially in focus: the World Economic Forum event in Davos. We saw Brett Garlinghouse pushing for tokenization, debates with Brian Armstrong from Coinbase around regulation, and RLUSD winning on all fronts. And what this all means for XRP is what we want to talk about today. Hey Vet, glad to have you back today. How is your Raspberry Pi Note doing?
Doing great. And
awesome.
Yeah, this week specifically, you could see like there was a ton of regulation conversations going on, certainly in Davos. I'm really curious to see how fast people will follow up on these things because so far it's a lot of talking. And we have seen like where the Clarity Act is going, and that people are very excited about these functionalities and features, but they need regulation, of course.
Yeah, there are two topics basically that everyone is talking about, and especially on Davos, which was tokenization, but in more detail, basically stablecoins. It was very clear that stablecoins is this one topic they want to talk about. And then basically innovation versus regulation. Is this possible? Is this not possible? Is it better to have a no bill than a bad bill? Or do we want clarity over chaos? This is the spirit that was mainly talked about. And about tokenization, if we look at what Brett Garlinghouse was saying, he was saying that the dialogue was spirited, as he was saying, and he was invited to talk with CNBC and Coinbase and Euroclear Group and the Central Bank of France and Standard Chartered, and they talked about stablecoin tokenization and regulation. And you could see in the debate, you could really see these like two opposite sides. You could see the banking and central banker side. Opting more into trust and into CBDCs and less into stablecoins and less into what could be privatized. They were really against privatizing anything. And then we have Brian Armstrong saying that the Bitcoin standard should be something that the ecosystem maybe should follow. And Brett Garlinghouse was pretty neutral, I think, but he was also in favor for stablecoins, obviously, because of RLUSD. So maybe what's your take on stablecoins in this sense? So
what really stood out to me is exactly these sides that you had between, I would say, the people coming from traditional finance, but more on the government side, like the central bankers and things like that. And of course, the Brett Garlinghouse, the Brian Armstrong, more from the blockchain crypto side. And I have to say, it was really great from Brian when he jumped in at that one moment where the French central banker was making essentially fun of Bitcoin, said as an issuer and so on. And Brian said, hey, actually, there is no issuer. It's decentralized, which is applied. You can apply the same thing to XRP.
Right.
And that was for me a very telling moment that there is still a huge gap between what people think this technology is. And a lot of people might have a huge misunderstanding, like really hard to grasp, wait, there is money that no one controls, it goes over the internet, and it's weird.
Right.
But for them, it's like policy. There is like people in suits, in high buildings, who make like decisions regarding the money supply and money policy. And he was like clearly overwhelmed with that. Right. But I like what Brad said in the sense of that they're not on opposing sides, that you can do regulation and crypto innovation together. And specifically what for me was interesting is because he doesn't say this the first time. This is like very iterative that he says it's the moment for this technology to be adopted. I truly think he sees like really this apex moment where like something is converging. There's like now is a good time to strike,
right?
And it's probably right now.
Yeah, there's momentum. And I really think even if you are against the Clarity Act right now, you should still be in favor for it because of this momentum. If we don't get regulation right now, if we don't get the Clarity Act through, no matter how, like it shouldn't be too bad. But like, let's say the Clarity Act is good enough. And as we can see with Brad, he is in favor of it. So I guess it's good enough. I think enacting the Clarity Bill right now would enhance the momentum. So it would really help the ecosystem flourish. Maybe institutions go on chain, help them invest in crypto, help the ecosystem grow. And with this, I think he's absolutely right when he says, let's not let perfect be the enemy of good. Let clarity be over chaos.
Yes.
I think this is really what stood out. And I think this is really right. Even if the bill is not perfect, I still think we should like help this bill go through.
Plus, because I know what also Charles was like saying and others, but the thing is we have always to focus is, and this is why I would here side with Brad, is you cannot get like a perfect bill because you have like different sides. Just like in the conversation we just saw in the other picture with the central bankers and so on, you will have people who are not in crypto, right? Who are also part of this bill, right? Who are also shaping this bill, and they have their own interests. And you will always have compromises because game theory tells us you cannot get all the way, like all your things, like you want something, the other person says, okay, you get it, but only if we also get this, what I want to have, right? So you end up with a compromise. It's a negotiation tactic. And so that's just very general. The only thing that we have to focus, do we get the important things for us into the bill? And I believe so, that there is definitely the good things in it, specifically regarding like classification, and you have like all of these, the decentralization aspect into it.
Self-custody is protected.
Self-custody, exactly. Very, very important, specifically the self-custody part. I've seen a lot of people got this wrong with self-custody, but it's actually protected. And these are the important things, and we should, of course, have them. You will not get everything because if you try to do this, you get no regulation, right?
Yeah.
And no regulation would mean that this momentum would stall, and the timing would be postponed to the back. And I think this is what Brett doesn't want to have as well, right?
I think he also doesn't want the government to change, because right now the government is very in favor for crypto, and he maybe is in fear that whenever the government changes from Republican to Democrat, this may be like he's like, from his point of view, obviously, because he's coming from a point where Ripple was sued, they fear that this look at crypto will come back in a way that will stall the momentum even further. Now we have these tailwinds, and if we stall the bill and we go back to where we were, we may end up with headwinds again, and then nothing will end up happening, right?
Exactly. And, it's a timing thing. It's when you see everything is perfect, take the opportunity. Right now we have the opportunity to have regulation and set it in stone, right? Like so that you cannot change it anymore. If you keep the negotiation, well, as you say, right, it might be pushed back to a time where there's a different administration, and then you have like completely different powers in play who pull on different things. Yeah.
And we see this very clearly, that they are very in favor and very bullish on the future if the Clarity Act goes through, and if we continue to push on tokenization and stablecoins, with the statement that actually Brad Garlinghouse was publicly saying that he thinks there will be new all-time highs for this year. And CZ was from Binance also was saying that this year we will have a Bitcoin super cycle. So the institutions, the people working for the institutions that are in contact with institutional players, they are more bullish than ever. And retailers, we are like down in this really bad sentiment, and we are scared and fearful. But I don't think we should. I think we should embrace the opportunity, and I think we should really looking forward to, as Brett Garlinghouse said, looking forward to the future and to this year.
Because everything goes in cycles, like if you have like a lot of ups, right? And we had a lot of ups from November 2024, right? Like we went to highs. You need also time to pull back to sort of, basically consolidate and then go back at it again and do this. By the way, because I read this with Ripple CEO says crypto all-time high.
Yeah,
it reminds me of the podcast with Thinking Crypto from Tony Edward. And Tony was like, he had like a one-on-one with Brad.
Yeah.
And Tony was like, Brad, not that you give like an XRP price prediction, okay? Like no price prediction, Brad, but do you think XRP will achieve high price? and then Brad, this is a price prediction. So he tried to, but at the end it was still a price prediction question.
It's also pretty fascinating most of the time because Brad is pretty fine with giving price predictions for Bitcoin, but he will never give a price prediction for XRP. Yeah, he always says it's too close to home, which is funny. But he can give a price prediction without giving a price prediction by saying.
I liked it, by the way. It's too close to home. Yeah. I like that.
Yeah. Going on with Ripple and Brett Garlinghouse, the next news is RLUSD partnering or getting listed on Binance. Not really partnering, but RLUSD being listed on Binance. Sadly, only on Ethereum. Like the onboarding is only for Ethereum. But they said that XRPL will come soon. And the reason for this is that the EVM tokenized site is already working for Binance. They don't have to like invent anything new. They don't have to integrate or connect with any new infrastructure. For the XRPL, they have to connect and integrate with trust lines, multi-purpose tokens. So this is very new for them. But RLUSD is actually opening the door for this.
Yeah, and I think a lot of people are not understanding that this critical piece that you mentioned with the infrastructure is if you have an ERC20 or an Ethereum token, being listed on Binance is super easy because they have already the existing infrastructure. They know how to handle these tokens for deposits and withdrawals. On the XRP Ledger or for any issued assets on the XRPL, which RLUSD is one, that infrastructure needs to be built first. And actually, they don't have it for issued tokens. They have it for XRP. You can deposit and withdraw XRP. But for issued tokens, you need a little bit more. And that a little bit more is being worked on. And that is a huge door opener, in my opinion, because once this infrastructure exists, you can have people with their tokens, if they qualify, of course, to be listed, being listed way easier. Because right now, maybe even if you have the volume or something like this, they could always say, well, we don't have the infrastructure, it's still costly. We need more than one token or something like that. But if it already exists, it helps tremendously.
You still have the listing fee, I think, which is gigantic for Binance. So this will like still be a problem for most, let's say, average issuer on XRPL. But RLUSD is showing that it is possible if you have the money, if you have the willpower and the connections.
But it shows you also how actually hard it is, right, to get an exchange, an established exchange, to adopt new infrastructure. Because if Ripple with RLUSD is taking this long, right, and also has to push for it, then for individuals or small projects, it's even harder. But luckily, once we have it set, then it's much better. By the way, I like how Coinbase is pivoting more towards looking more into DEX. And basically listing tokens from the DEX instead of like the traditional way, because this by default says, hey, if you have enough liquidity, it can be traded on Coinbase. And if not, then you are not on Coinbase, because this whole relationship about exchanges tapping into the DEX is for me personally a very interesting one. I think this is the future.
Yeah, definitely. And you see this already with Base, for example, BNB Chain. Like you see these exchanges tapping into either layer 2s or layer 1s, trying to like get on chain, not just be another broker, but actually be another solution that is working with the decentralized ecosystem, not against it, which is pretty powerful. And you don't only see brokers and exchanges partnering and being in favor of decentralized finance and new technologies, but also very, very old players like DXC Technology, which is like a company that when I was checking for this company, they are really old, like 40, 60 years old. And what they offer their customers and their partners, which they have 40 financial institutions and really big core infrastructure partners, what they offer is just technology for these TradFi institutions to not change anything in order to get with the times. So in order for them to connect with Ripple custody or Ripple payments, they don't actually have to do anything. They only have to connect to DXC technology and to their cloud and to their, what they call DXC Hogan core banking platform. And they are already connected indirectly with Ripple custody now, Ripple payments, and Ripple USD. And why is this important? Because we already know with Ripple custody can be used to tokenize assets on XRPL, and you can also hold assets. So these core banking partners, they could hold, for example, XRP on Ripple custody while being connected to DXC technology. So you have these very old TradFi institutions holding crypto assets without changing anything in their infrastructure. So it's very easy for them. And also for cross-border payments and Ripple payments, we know Ripple X and Ripple is working very hard to bring ODL, so the liquidity part of Ripple payments, on the DEX, on the XRPL DEX. For this, we still need some features, but we see where this is going. And the cross-currency part is what these old TradFi institutions can now tap into. Right? They have now the connection to use cross-border payments and to use the XRPL DEX as soon as permission domains and permission DEX are live. We will talk about this later, but I think this is pretty powerful, and we see it in the numbers as well. $5 trillion in deposits and 300 million deposit accounts. Gigantic numbers, I think, which is huge. And
beautiful.
Yeah, and on this, I was checking actually also about some partners. I said potential banking companies because I don't think they're really transparent with this. It's just that a few analytics companies, like the two I was linking here, they have analyzed what these partners should be. They don't really 100% know if these are the partners, but the certainty is very high. So what they found out is that DXC Hogan Systems is actually used by Wells Fargo, for example. Also, what can we see? Bank of America. Many people are looking for Bank of America, how Bank of America can be used with XRP and XRPL. Maybe this is how. Then on the second part, we also have Barclays, which I think is pretty well known, and US Bank and others. There are a lot of technology partners and banking partners now being able to connect to Ripple without changing anything, which is the future, I would say.
Beautiful. That's great to see.
And on this, because we were talking about P-Domain and permission DEX, we have to talk about these features as well. And for this, we can just open XRP Scan. And here we see the active amendments. We can see the amendments that are still up for voting. A few are in the activation phase, which, like, for example, these 5 fix amendments. And then we have permission domains, and which is also in the activation phase, which took a lot of time. And the last part of the puzzle, I think, to bring Ripple payments on the XRPL DEX is the permission DEX. But I was wondering that why are people in favor for permission domain, but why does it take so long for them to also vote on permission DEX? As we can see, 214 days already in existence. Why is no one voting for it?
Yeah. I think we have to look at historically, like when voting really stalled a little bit, I would say. Voting really stalled when there was like the permission delegation bug found. The permission delegation bug was quite severe, not to go much into detail, but it was not great. And that spooked a lot of validators and was like, hey, you can see like where all the net nays trickled in. And the question was then, hey, are these things really well tested? We had always this discussion, also with the automated market maker. And we have to keep in mind, these are protocol changes, okay? protocol changes means we changed the XRP ledger. Okay,
Right.
the new XRP ledger with the feature is not interoperable with the old one. Okay, they are different. This is why we have amendment blocks. And the thing is, we have to keep in mind that when we do these things, it should be really with a high degree of due diligence. Okay, we cannot say, okay, it was tested in development and that's done. We need also third parties to test it. Not only the author is testing it. So the whole concept of testing, we have to be honest, is not really great on the XRP Ledger. But there are also challenges with it, because what does good testing mean? You know, like if I say better testing, hard, like what is it? You know, like you cannot really grasp it. When is good testing? For some, it's perfectly fine. For others, no, it's not. When is it? Well, you know, it's very subjective. That's the problem. So it took a lot of time, and this is the main thing I would say for all the features is the testing part. This is what the validators, also the UNL validators, say in amongst each other as well. It's like, hey, these are not very well tested, question mark. And if someone has a concern, then they're rather more careful. So knowing this, but we could also not stand still, right? We cannot just like, okay, we do nothing. So the middle ground is to be at least carefully with activating features. And you can see the permission domain one is now in activation. I believe the next ones in line would be something like token escrow, who would come after this, would get more votes. And then after that, maybe permission DEX. I would probably think Batch would among these be the last one.
Oh, really?
Because Batch, at least from my sense, and a few others who voted nay, is like Teku as well. Is there is like still a fix coming for it that a lot of people want to have, including myself. So I would vote for Batch once this fix would be at least available to be voted on. It doesn't need to be activated immediately right together, but at least be available for voting. Then I would vote also for Batch.
And it will be introduced in the newest version, right? Version 3.1.
Exactly.
It will be.
Yes,
Right.
it will definitely be. Ed Hennis is working on it. And yeah, so in my opinion, permission DEX, we will see this shortly after as well. Yeah, I would say we can see it in Q1. I think is a fair optimistic prediction. I would say in Q1 is fair to say. Right now we're in January, so yeah.
Yeah, I think this is also because permission domains in itself isn't really doing anything.
Exactly.
Many people are misunderstanding what permission domains and permission DEX really is. So maybe to summarize and explain a little bit, I thought about maybe explain permission domains and permission DEX with a house. Let's imagine the XRPL is a house. Like you have this house and it has an open door because the XRPL is permissionless. You can always tap into the house. You can walk into the house, walk on the floor. Everything is open. Everything is permissionless. But there are also doors. And all these doors in the house, they are locked. And the only way to unlock them is to have the right key. But with keys, we don't mean like private keys or something. We actually mean credentials. So a requirement that you have to fulfill to be able to unlock the doors. So for example, there's a door. It only opens for you within XRPL, within the house, if you are KYC'd, or if you are sanction screened, or if you are proven to not do money laundering or something. Then this door will open. And as soon as you have the right credential, you can enter the room. So you go into this locked permissioned room, this environment, this permission domain. And within this permission domain, it's just a room. The permission domain, the environment is just a room. It does nothing on itself. So what you actually need as well is something to do in the room. So you need an activity. So the activity in this case could be permission DEX. It could be lending, borrowing, which will be introduced later in a later version. But for this thought experiment, let's say the activity is permission DEX. So you need credentials to get into the room. Yep. You need the permission domain to have a room. And then you need permission DEX to actually do something within the room. And permission DEX is just a way to do trading on an order book within, let's say, constraints and limitations. But these limitations are by design. It's not like it's a bad limitation. We want liquidity to be guarded and limited in a way so that institutions like Ripple are fine with going on chain, using the XRP DEX with their customers. And you posted this on X as well with David Schwartz, saying if there is just 1%, or if we are not 100% sure that everything we do on the XRPL DEX is compliant, then we just can't do anything. And this is really why we need these two features.
Yeah, I mean, it's really, I mean, as you say, it's very simple. That permission domain is just a tool, right, to guard other features like the DEX. But you could also, you mentioned the lending one. There's also actually another one with XLS 87, which is for tokens. So you can do token pre-authorization. So I can pre-authorize anyone who is maybe KYC'd or AML or whatever credential they have. So it's really just one tool, a building block, just like credentials is a building block to utilize. So it makes no sense to merge them together, right? To put two domains and DEX together. Why? Because then you cannot use the domain if you would have merged it with other features, right? You need to be independent. So this is very important, and it's a crucial feature for compliance. It's one of these compliance building blocks that we have that are very useful. I'm also curious to see how people are going to use permission DEX not outside of the context, maybe to guard liquidity, sort of to mimic maybe smart contracts, the feature of that. If they are able to do it, there's room for creativity. There's definitely room for creativity, and I will be curious to see if some developers and projects will be able to do that. I know that Adam, at least, from the developers, is sort of aware of it. I don't know if they would implement this. But it's definitely a great feature for the XRP Ledger and for builders alike. But again, this is a tool to be used. So we need builders like Ripple or other institutions, if they want to use it for institutional use cases, to actually use it, because they themselves alone do nothing, right? They are just tools.
Also very important to understand, these features doesn't enable or they doesn't restrict people to not hold XRP anymore or something. Because I saw this in the comments, just because these features enact on XRPL doesn't make XRPL permissioned, or it doesn't make XRPL a restrictive chain or permission chain that will not allow you anymore to hold any tokens or something. This is not the idea. The idea is to have like this hybrid situation where the XRPL is still permissionless. The DEX, the public open DEX, is still open and available for anyone. But you have these guarded, as you said, guarded zones, environments, domains where liquidity is like restricted in a certain way.
Yeah, and I remember we had when the amendment came out, people were like very spooked. It was like, oh, now the XRP Ledger is not decentralized anymore. Right. So the thing is, these permissioned options that we give for the XRP Ledger, like permissioned domains, applied to DEX, maybe lending, maybe tokens for pre-auth, they are all self-inflicted, if I can say so, and specifically opt-in. And they're fully freedom. So what do I mean with this? If I have a token, okay, let's say I have XRP. XRP can be freely traded, right, on the XRP Ledger. But maybe I want to trade in an order book, right, where I want only specific people to trade with. So I want only to trade with you and the person who's right now watching the video, right? Like we three. If I want only to trade with you three, with you two guys, then I should have all the freedom to do this, right? This is not in contradiction to decentralization or something like this. I just choose for myself. I only want to trade with you guys, and this is why it's fine. What's important is it's always from the user coming. It's never coming from the protocol. So the protocol never says, you random person, right? I'm going to cut you off from something else. It's always other users who made these guards, right? They said, hey, for myself, I only want to trade with these people. Or other people say, I only want to trade with these people. And that's, of course, fully freedom, right? That's opt-in. and that is in no contradiction to decentralization of that.
Right.
It's self-inflicting. It's like, hey, I can choose what I want to do with my offer. Very simple. If you have like a garage sale, right, and you have a bunch of stuff around, and people come and want to pick, you are not forced to sell anyone anything, right? Like if someone says, I want to buy this, you can say no. I don't want to sell it to you. You know,
Yeah.
It's odd that you don't want to sell someone something, but that might be the thing. You say, no, I don't want to sell it to you. I'm sorry, maybe to someone else. You wouldn't say like this is the trade is not decentralized. No, because the seller always has should always have the power to dictate who he wants to do business with.
Right. The market, so the XRP DEX is open, but within this market, let's say we have a market sale, there are many like people selling different stuff, and you have people that are freely selling to anyone. But as you said, you have also people that are not willing to sell. Let's say they are selling flowers, but they only want to sell to people that are really in favor for gardening, and they're very, So you can restrict. If you want, you can restrict, but it's not forced by XRP, and it's also not forced by the XRP blockchain. It's based on whoever does the tokenization and whoever wants to sell something.
Yeah, and if you think about it, it's like so intuitive and makes total sense. Of course, if I have something to sell, I should be able to dictate who I want it to sell to, right? Because it's my asset. And if I say, no, I don't want to sell it to you, then I shouldn't. The open DEX is sort of for those people who don't care. I just want to sell it to whom I don't care, right? I just want to sell my flowers to whoever. But as you say, if you have some flowers that you have a relationship with, you cared for a long time, maybe memories, you only wanted to sell to someone who's really going to take care of it. So what you do is you say, hey, I want to vet these people out, right? And you do this on the DEX with permissioned DEX.
Yeah, it's a combination: credentials, permissioned domains, and permissioned DEX. So, for example, your family would get all a credential that says you are basically KYC'd in the sense that I give you permission to be a family member of me. And then I create a permission domain that only allows my family members to go in, like back to this XRP house. You have this room where only my family members can go in. And within this room, within my family room, so for example, you have like the flower that you love and you only want to sell it to your family. This is how you would make that possible. And maybe a little bit more... this was a very abstract way of explaining it, but there's more in terms of compliance. And I think one very interesting aspect was that you don't only have to do KYC, AML, and sanction screening. You could also do something like check for being an accredited investor, for example. Let's say, for example, Ripple, for example, they are openly saying that they are not planning to do an IPO. But you can still, if you have the connections and you have the ways to do it, you can still buy shares of Ripple.
Yes.
But you can't do it on the XRP DEX because there's no way for Ripple to vet you to make sure that you are an accredited investor. But with credentials, you could say, here you get this credential, and this credential shows that you are an accredited investor. Then I create a domain where only accredited investors can come in, and then you can like create an offer and sell on the permission DEX an offer that says I sell 10 shares of Ripple pre-IPO stock, and to whoever is able to join the permission domains.
Yeah. And this whole concept about credentials is so important because it allows you to I think it's called like verifiable credentials to verify things without knowing like really the details, because the details are not important here as well. For example, I mean, your example is great. You could do something else where you say, hey, you sell tickets to a bar or a concert, and only if you're above 21 or 18 years old, you should be allowed to purchase or buy, right? The exact age is irrelevant, whether you're 25, 30 or something. But I just need to know you are above 18 or 21, like the limit, and that's fine. Like this is all I need to know. And if I see the credential that this is okay, I sell it to you. You can buy it.
Right.
And this makes screening and filtering so much easier on chain. And we had like this discussion as well with stablecoins, to just sort of go back to with Davos, is this idea of bank deposit tokens. And bank deposit tokens coming sort of, I guess the first time I've heard it was actually from Saul and Greg Kidd. He was like telling me I should definitely watch the video with Greg Kidd and Thinking Crypto Edward. They were talking about bank deposit token as the next iteration of stablecoins. And bank deposit tokens are essentially stablecoins with one additional component to it. And this one additional component is identity. So you can think of a stable coin together with someone who has a bank address or an identity, KYC, AML, accredited investor, as you said, or whatever, right? Like you are not in a sanctioned country, you are among the non-sanctioned countries, something like that. And this is a very interesting combination because that makes now a lot of things very compliant in sort of the green market that he says. He calls it the green market. And so when we think of credentials, domains, decentralized identity, this is a huge enabler for DeFi, for crypto in all like finance and markets. Like without this, you have only the gray market and you have only so many people who can interact in the gray market. You know, it's just what you limit yourself.
Yeah. Now you enable the boring DeFi as well, the boring institutions with their boring use cases. But this is what we want, right? We want these money market funds. We want tokenized stock. We want tokenization in general, like this RWAs that many people are talking about, because then you can enable use cases that are only available to a certain amount of people that have access to brokers. And as Brian Armstrong said in this interview as well in the beginning, he said that there are a ton of people that have no access to brokerage accounts at all. So there is zero way for them to trade anything and to get access to these boring institutionalized use cases and products. And with identity on-chain, with permission domains, credentials, permission DEX, and tokenization, you could enable anyone who fulfills the requirements to be able to actually invest in money market funds, for example.
By the way, this is just at the sort of at the periphery here, is that some people believe with DID and credentials, they sort of think that you don't need governments anymore to prove identity and things like that. This is not the case, right? Like you are not doing something like this. The only thing that you are doing is basically you bring this on chain and make it easy for anyone to verify without very quickly without repetitive tasks. For example, how often did we do KYC with so many different, like each time I open a new account or I go to an exchange or something like this, you KYC here. I do MoonPay KYC. What if you just do once KYC, right? You have like your credential and all of this. You know, okay, this person is KYC'd, right? And then you can just log in everywhere because they know you're KYC'd. And if they have an issue, right? Let's say there is actually an issue where they need to know your identity, actually, they can look it up and then call basically the issuer and say, hey, you have KYC'd this person with ID, whatever. We have actually a case here, a subpoena or whatever. We need to know the identity of the person. And then that person, of course, the issuer would give out the data. But it makes just things way more efficient, way more efficient. Zaman could do it, of course. I think they even do it with...
They kind of already do it, but not by using DID. They have their own system. So there was this one time where someone asked Wietse how it would work. And he said that he would need, for DID to work for them, they would need to KYC again. So everyone who wants to have a DID on chain using Zaman, Zaman would need to ask for KYC again, which is like
one more time.
Just one more time. Then something goes wrong, and then just a second time. It's easier on paper than in actual practicality. So and on this about these identity solutions, and again on permission domains and permission DEX. We were lucky to ask Mayuka and Antonio about a few questions. We could ask them a few questions and get answers from them from the Ripple X team, because I was really, I kind of tried to force a yes or no question, because as we know with Ripple and the XRPL, it's very hard to actually bring Ripple on chain to actually use the XRPL in ways we want them to use. But now it was very clear that they said, we need credentials, we need permission domains, and we need permission DEX as well. And then we can use Ripple payments on the XRP DEX. But I also wanted the yes or no. I wanted them to commit basically to the statement, to say, yeah, we do it, or no, we don't do it. And so we asked questions, and I was lucky to ask 5 questions. And the first one was this yes or no question. I wanted to know if this is really everything they need. And the answer from Antonio was, yes, these are the 3 amendments that we need to enable Ripple payments on XRP DEX. Pretty simple. They committed, basically. And then the second one was more like, we know already about, and we talked about this as well, KYC, AML, and sanction screening. But are there any other ways of enabling something to work based on requirements? And the answer was was filled with a lot of possibilities. And like you already talked about accredited investors, so you could add a filter, a credential that filters with permission domains based on accredited investors, based on a jurisdiction. So let's say you can only trade within a permission domain if you are coming from Germany, or if you are coming from USA, or within a certain state in the USA. Then counterparty type, you only are allowed to, let's say, trade with banks, but you're not allowed to trade with small businesses. Then based on licensing, if you have the license, you can trade. If not, you can't trade. So there are many ways to enable more complicated, more institutionalized use cases on chain with these filters. And the last one, I didn't get a real answer, but I still wanted to ask them about some early estimates and forecasts, because I was thinking, if Ripple payments goes on chain, like using the XRP DEX, is there a way for them to already say well, we expect millions or billions to go on the DEX, to see if this could bootstrap the DEX maybe? Yeah, I mean, I got an answer, but the answer kind of didn't answer my question. So it was, right now we are focusing on inputs to building a trusted institutional grade network that delivers real on-chain cross-border liquidity. If we get this right and deliver genuine utility, adoption and volume will follow. And I mean, he's right with this, but
his expectation management.
Right. He's honest, because I was thinking about the first 6 months, but maybe 6 months is already too early. Maybe we should think about the next 2 years, maybe, or 3 years.
Probably. Yeah.
Right. And then you also ask a lot of questions, and
I just threw everything. I was like, hey, maybe there will be something that they will actually be able to dissect.
Yeah.
The main was the storytelling part, which I think is always important. That I was asking, hey, can you storytell exactly for Ripple payments? How they would utilize these features end to end. So I'm a customer of Ripple, right? I come to Ripple and I want to use their payments product. How does Ripple utilize these things in the back end? How do they put this together? I was curious about that, and Antonio was answering this. So he said, think of Ripple payments as the connectivity tissue. An institution onboards with credentials. So you onboard them with a credential, give them a credential, hey, you're KYC or AML, and then operates inside of the permission domain that enforces these policies, okay? And access liquidity via permission DEX. So you have the credential that onboards them, gives them KYC, AML. You have the domain that enforces that policy, and the permission DEX gives them the liquidity, right? It lets them to access it, because without the permission DEX, they cannot access it, and settles then instantly and atomically on the XRP Ledger. And the vision is, of course, that they get this on-chain FX trading settlement market directly on the XRPL. Another one that was added to this question was regarding, permission DEX is currently only using the order book for now. This is very important to know. The focus is really for them to enable trusted trading and settlement for institutional use cases where exact price, size, and execution could matter most. This was interesting. He said, for them, it's very important to know a specific price and size in a controlled environment. And you can do this with order book very well, because you can just look at the order book and see, hey, what is the price right now? And as we learn from real usage, they will then see if they can extend it to an AMM. That would be amazing. If you can extend this to AMMs, would be really, really great.
But I think this will be complicated because of slippage. Because if you really want to control the price, let's say with market making, or you want to know which price you are getting for which execution. The AMM is pretty like not built for this because you have slippage. You cannot expect the price to be perfect all the time.
Exactly. And my follow-up, this was for me interesting, this exact price, size, and execution control. And I was asked, is this basically what clients value the most for such a settlement layer? And he says what institutions value most is certainty and transparency. So institutions really want certainty and transparency. The hard problem in cross-border payments, like this is for cross-border payments in general, is stitching like these things together. And with permission domains and permission DEX, you can handle these policies and executions very easy. So you have like for all of these rails and jurisdictions, you can have like your domains and your liquidity books, and then you can route this through the DEX, and that's great. But they really want to have like all this settlement risk removed and price uncertainty. Which of course settlement risk you have no on the XRP Ledger is instant settlement. That's great. You don't need to hope if like in a day or so it will settle. Nope.
It's sudden.
So honestly, just from like seeing what their client needs is, it's very boring. It's actually very boring, very simple. But that's a cool thing. It's actually very simple. That they just want the transaction to go through, which is ridiculous if you are not an on-chain. If you're an on-chain user, like of course my transaction goes through. Right. But in traditional, it's like your transaction might not go through.
But I kind of understand it. If you are talking about like let's say €5, you may not be interested if it goes through by a certainty of 100%. But if we're talking about trillions of dollars, and you because of just one minor issue or because of whatever is happening, the trade goes not through, and because the trade goes not through, there is yield that is not getting earned, so you're missing on potential yield. And let's say the yield is 1%. 1% of let's say $1 trillion, even if you break it down to let's say a window of half a day, it's a lot of money, and it's missing because you had no certainty that the trade went through, so that or the payment went through, and the money went from one place to another, which is like ridiculous from our point of view because we are not thinking about these time frames and these certainty aspects this way. But the institutionals, they want certainty because for them every second counts. Everything can be used because we are on the XRPL. Within seconds, you can switch from, let's say, holding a stable coin to holding a money market fund and earning yield on this, even if it's low. And then you go back to a stable coin whenever you think you need this stable coin right now to pay a service.
Yeah, it's so crazy that just these efficiencies and that everybody can access it, everybody can verify it, audit it. It's just that alone is enough.
Right.
It seems to really, it doesn't need to be fancy. Like, not at all. It's just like, hey, we just need this to do. Does it do this? Yes. Okay. Yeah, we are on board. That was like basically, this was basically it. That was for me like very, very important to understand like what are actually there, because I was like wanted to think, hey, is Ripple building also in the direction of what they believe their client demands are, right? Which naturally you would think, of course, and they certainly do, and it seems also to be very clear that these are indeed the pain points. Made me just like also more confident in Ripple payments as a product, because we know also from Antonio and from your question was like, hey, they want to bootstrap this. There is like liquidity, volume will follow if they can bring utility. From what he's like clearly saying, my opinion, just as a customer, Ripple Payments has a lot of utility, and because of that, I believe it will have success. And because it will have success, it will bring things to the XRPL, essentially.
Right. And there's also one more thing that I think many people are not caring too much about, but this is very important. The moment Ripple Payments goes on chain in a permission DEX, they will have institutionalized market making going on. And these market makers, because they're institutionalized, they get basically paid for the service. But what they will need to do market making, they need an inventory. They need tokens on both sides of the order book to do the market making, because they are trading the spread. They are always selling and always buying as well. So what they will need, they need XRP. Pretty obvious, right? And even in very high amounts, because they need the order book on the permission DEX for Ripple's payments product to be liquid. Otherwise, you couldn't sell euro, Brazilian real, and dollars.
Yeah. I think it would be interesting specifically for market makers who are not even involved in any of the domains, right? If they hold XRP, for example, if there is like a permission domain for, let's say, USD Euro, so the USD Euro pair, you need, of course, USD and Euro. You need these both tokens. But USD and Euro, they have also XRP pairs for themselves, which opens up like a bunch of other ways for people to cross market make these pairs, so that XRP can be the bridge currency essentially between these things. It's like so funny because people are like always, why do we need a bridge currency? Bridge currency makes no sense. This is like a live usage of it because anybody can hold XRP. Anyone can use XRP. It has no jurisdiction, and in this setting, it's so obvious why XRP is so powerful. In the world basically of permission domains, indexes, and jurisdictions, the asset without a jurisdiction is king. So.
And the cool thing is everything is liquid to each other indirectly if it is liquid to XRP. So whenever you want to trade anything against anything else, as long as you are liquid against XRP, you will always be liquid against these other assets that may not be liquid directly. As we said, let's say money market fund, Franklin Templeton has a money market fund, and let's say it's not liquid to, let's say, a euro stablecoin, just for the sake of the argument and for the example. But both tokens are liquid against XRP. The moment both tokens are liquid to XRP, they are also liquid to each other through XRP.
Yeah. The interesting thing is, I think Monica Long called it like the long tail of assets for order bridging. It's like you will have maybe a few order books where the direct pair is more liquid. Or like, let's say USD Euro, maybe it would be like a very, very, popular one. But the long tail, like the most amount, like they are not, and they will benefit a tremendous amount from like the order bridging through XRP. And every new asset that comes on chain will, benefit from that. This is sort of the very, very interesting effect of a multi-chain ledger like the XRP ledger.
And for market makers, it's also pretty easy to do market making for XRP because the counterparty risk is not there. If you have an order book with two tokens, you have to think about counterparty risks as well. If an issuer defaults or isn't able to redeem the asset against the underlying actual real asset, you have a problem as a market maker because you are losing a lot of money. This is why they are usually paid in premiums just to do the service. But with XRP, since it has no counterparty, it's very obvious that the risk while doing the market making is way lower for this order book in contrast to an order book that has two tokens with two counterparties.
The only thing, and I believe Chris Larson said like very perfect, the only thing that you need to worry about is the price in any given second for it, and that's it. You don't need to think about counterparty risk when you do so. XRP is actually great for market makers. Very, very great, because you only need to worry about the price at any given second, not about whether the counterparty, let's say an issuer, would default or have like a problem where that would ruin your business. No one can default on XRP.
And there are more use cases. Now we talked about permission DEX and permission domains and credentials, but there are these big themes and narratives right now that are going on in the ecosystem. One is obviously like tokenization is one big one with stablecoins, and then we have like institutionalized FX markets, for example, which is also like payments and tokenization. But the third one, which is old and new at the same time, because the third one is actually AI and agentic payments. And this is actually nothing new, but at the same time it's new because now we see agentic payments being combined with institutional demand. You see that institutions want to go on chain to do DeFi, but they maybe don't want to do it themselves. They want to like outsource this maybe to an agentic AI agent that does it for them in a maybe complicated and algorithmic and automated way, which brings us to Evernorth, which partnered with T54, which is an AI company, which partnered with Evernorth to bring AI and agentic payments to the XRPL. What do you think there? Is this something we need on the XRPL? Will this bring XRP to the foreground?
I'll be honest, I had this absolutely not on my radar, but last year when I did like the space with IO, as his prediction, one of his trends that he said he would see for 2026 was like agentic payments coming to the XRP Ledger or using the XRPL. And now we see it indeed. And it's for me, I'm still critical about it, but it makes like total sense if you just think about it. We have more and more AI usage, agents, them paying each other or doing business. It's just, it makes such total sense. And specifically on an environment that doesn't have like, it needs smart contract is, I think, very advantageous. Why? Because they can all do it with API calls.
Right.
And so these agents can just do it with API calls, interact with the ledger. They don't need to deploy like a contract or do some, or figure out a contract. It's very, very well documented. Actually, the XRP Ledger, I would say, is perfect for AI and agents because everything, all the APIs are documented. No like difficulty to find out like what would it do. All fixed functions. Right. That's actually very, very great for large language model and agents. You know what? Who I would love to talk with this about that is actually Dennis.
Okay.
Dennis is super hard in now in AI. Like he's just diving crazy deep into it. What he thinks about like these. The overlap, but what are you thinking?
We have to bring him on the show.
Yeah.
From my point of view, I think this is just very obviously the future because you can't expect everyone to do all the payments themselves in the future. The more it's automated, the more the actual complexity is abstracted. The easier it is for everyone to do payments without much thinking. So if let's say you have 100 Ripple USD and you want to invest in a DeFi strategy, but you are not well versed in DeFi and you don't know where you should invest and you don't know like which stocks and which AMM protocol and like that. It's also so complicated and it gets complicated even more by the day. And what these AIs and agentic payments could enable is for the average user to be a DeFi participant without actually knowing what is going on. Because what AIs are doing is they do stuff based on context. So if you give them context, let's say I want to invest in DeFi, but I want the investment to be very low risk. And then you say, then the AI maybe tells you, okay, I have found something for you. It gives you 5%, very low risk. Based on treasury investments, maybe it's very low risk, and I can even insure this maybe for you. So you only get 4%, but you get 4% in an insured way. Without doing much research, you could just give the AI your money. Like let's say the AI is managing a wallet for you, and you invest your money into this wallet for the AI, and the AI would do the DeFi investment for you and yield you money in a secure, context-based way without you knowing anything about lending, without you knowing anything about AMM, without you knowing anything about blockchain, basically, which is, I guess, how the future will look like.
Just as a side note, very interesting. I believe like you will see a lot of random interactions on the XRP Ledger because of this. Like they will just pop up. And it's like, oh yeah, of course. It's like people doing prompts, essentially. It's like someone was like reporting that they have issues with XRP Scan a few days ago. He said, hey, XRP Scan, they tagged me and then, hey, can you help? I was like, sure. I tagged like XRP Scan to check out. And XRP Scan said, well, our website and APIs are right now being hammered by AI bots. Essentially by AI, like, people, what they do is probably, hey, give me like data. They try to get like data from the XRP Ledger and they ask like XRP Scan. So, you know, these AI models, they hammer like the XRP Scan side to get like metrics. Right. But this is of course, you know, like a lot more than you would be seeing if there would be no AI. With AI, it's so much easier for people just to access these sites and hammer them. Right.
You can vibe code your solution.
You just can vibe code stuff. And
Claude Code, for example, and just tell Claude Code to bring in metrics from XRP Scan.
And he does it. And then you have the issue with XRP Scan. It was like, oh yeah, I'm actually getting hammered right now. I was like, okay, I didn't know that. Wow.
Yeah, but I guess this is also good for XRP Scan in a weird way, because at some point, because the demand is so high, he could rate limit, and he could say, if you want more, if you want your AI agent to ask more often to get more data, or even more data more often, he could say, yeah, pay me with DALI Pay, for example, use a payment channel.
DALI Pay, yeah.
Pay me with XRP. Stream the payment while you do the AI calls. And this is something very powerful, which we will see a lot more in the future. The more AI gets used, the more AI agents are working on behalf of an actual user that want to invest in something, or want to use DeFi, or want to vibe code anything. Yeah, I think we talked about a lot today because there was just so much going on, so many news. We talked about Brett Garlinghouse and the regulation part. Tokenization, Brian Armstrong trying to bring the Bitcoin standard to the central bankers, which will probably not work out. We had Avanov and AI. We had XRP Scan with permissioned domains, permissioned DEX, and we had DXC technology partnering with Ripple. And my guess in the future that with Ripple custody and Ripple payments connected to the XRPL, and connected to these very old TradFi institutions and AI agents coming up, the future is bright, I think. The future is bright for the XRP Ledger and also for XRP, because as we know, XRP is in the middle of everything. Nothing works on XRPL without XRP. So in order to do anything on the XRP blockchain, you always need XRP. This will increase the demand. We have limited supply, so naturally, you know what happens. So this is like how we expect the future to look like. And I hope, guys, you learned something new. Thanks, Vet, for joining the session today.
Absolutely.
And it was a
Happy
pleasure
Friday,
as always.
everyone.
Happy Friday.
Yeah.
See you next time. Ciao, ciao.
Bye-bye.